Welcome to the Stocks with Josh show. I've got some big news stories I'm going to cover today. But first, let's take a look back on the last week in the S&P 500. We got a move 14% from the October lows. Now things are looking kind of frothy. When the stronger than expected jobs report came out Friday, we saw again that good news continues to be bad news, and we're reminded that the Fed Powell has a plan. The data was basically in line with his expectations, and we know for certain that he's going to continue to pump the brakes on the economy through his scheduled rate hikes. Now, the markets took a pause Friday, basically from being bullish so that they could digest everything that was going on. They weren't quite sure whether they wanted to go up more or whether it's time to turn around. Interestingly, PayPal was one of the worst performers. It fell almost 5% to around $75. Now, I believe that points us ahead to the new 52-week low that's on the horizon for PayPal. It shouldn't be at the bottom when the rest of the market is near its tops. The market is telling us right now which companies are going to get punished and which are going to be the new outperformers. Bank of America sounded the alarm and said it is time to sell the bear market rally, and they're saying sell it ahead of a surge in the coming unemployment rate next year. Despite the strong job report, they went on to say that unemployment in 2023 is going to be as shocking as inflation was in 2022. That is an extremely bold statement because I think inflation has obviously been our biggest problem, and they're coming out saying that unemployment in 2023 is going to be the biggest problem. They basically said that they are selling the rally because it is based on a Fed pivot narrative that has become old news. Now, the report I read suggested that it was the hedge funds that were driving up the markets, not institutional investment. And I think we need to pay attention to that right now. Basically, the so-called smart money said we are buying bonds. We're not buying stocks right now. On that note, the smart money pulled out $14 billion in stocks last week, making last week the biggest stock selling week. But you're saying, Josh, the market didn't go down, it went up. Man, these guys are doing it secret squirrel style. In the last 3 months, that was the biggest outflow of stocks. Now, if we were to measure this last Wednesday to the previous Wednesday, the outflow was even bigger at $16 billion. So I'm just going to sound the alarm, guys. This is a red alert. The smart money is quietly unloading their bags. Now, if you're tired of being in the dark and you're tired of doing this trading thing alone, hit the like, become a friend of this channel by checking to make sure that you're subscribed, and join the family by hitting all notifications on that bell. In the news today is a story about Delta pilots that struck a deal to get more than $30,000 in pay raises. It reads, Delta Airlines and its pilots union have reached a preliminary agreement for raises topping 30% over 4 years, a milestone deal that could sharply drive up aviators' pay across the industry. They have been in tense negotiations for months, if not years, the article said, as crews sought better pay and a better schedule. Now, I asked everybody their thoughts yesterday about the railroad workers not being allowed to strike, and I want to follow up with a few thoughts of my own. First, many U.S. companies exploited the inflationary environment to raise prices. We know that. The prices of many goods went way higher than were justified. And as a result, these guys saw record profits. Many of them are sitting on very big piles of cash right now, such as Apple, the world's largest company, has over $200 billion in cash and liquid assets. With that amount of money, these guys could literally go in and buy Mickey Mouse and Walt Disney in cash if they wanted to. If governments want to keep people working, then don't sit back while mammoth corporate monopolies form. Then, when people want their share of the loot, you say no. You know, my position can be summed up in one simple idea. I am for the power of the people. Government should have prohibited these companies from becoming the conglomerates they became by supporting free market competition. Yet they present it to us like they're doing us a favor by crushing the railroad union. Now, listen, you can be pro-business and you can be pro-common sense at the same time. They make it out like the workers are the bad guys who are somehow keeping you from having presents under the tree. And I just have to quickly go on record to say, no, they're not the bad guys. These are the guys and the gals that keep the railroad going in the middle of the night so that all of us can enjoy a Venti peppermint mocha during the holiday season. So I'll just say this, if you do anything in America that helps goods to go to and fro, whether it's railroad, trucking, Amazon, FedEx, UPS shipping, I'm just gonna say thank you. Thank you for getting up and keeping this country rolling. In my eyes, you guys are not the problem. And I just want to say congratulations to the Delta employees that got a bump in pay. Larry did a great video the other day titled Keep More Money. He had an expert on talking about tax loss harvesting, which since we're in December, this is a very important topic for a lot of us. And I get asked a lot of questions about it. So I just wanted to encourage everyone to check out that video over on his page, Stock Up with Larry Jones. He does a great job answering common questions about it. It's an important topic, so make sure you check it out. Now I'm going to give you guys a Bitcoin, Ethereum, and Dogecoin update in just a minute. Before I do, check out the link in the top pinned comment for the Moomoo investment app. Moomoo, guys, is a zero commission, free to trade exchange with the lowest retail margin fees of any retail broker. And in recent weeks, they've actually outgrown Robinhood in market size. These guys are a licensed, registered, and insured broker. And if you open and fund your account, you can get 15 free stock with a chance up to $30,000. And you could potentially win $60,000 in their limited time holiday offer. As a bonus, there is a Stocks with Josh community page and the Stock Josh family chat group. Click the link in the top pinned comment and you can start investing today with better tools. All right, let's talk about crypto for a minute. More and more, Bitcoin, Ethereum, Dogecoin, these have all been early predictors or signals to the broader market. I'm not entirely sure why, but perhaps it's because of a wider global participation. In recent weeks, I look at Bitcoin on Sunday night to get a clue on how the market might perform Monday. It's not a perfect indicator, but more than once it's been accurate. So when the jobs report came out Friday and crypto didn't react or sell off, again, it was a little bit of a calming influence on the markets. Some speculated as a result of that the negative reaction in the stock market wouldn't gain traction. And that's exactly what we saw in the markets. We saw that even though they had pulled back, they pulled back up. Now, Dogecoin did slip a little bit, but that's only because it has actually outperformed and was due for a small correction. Now, I think it's going to be very important to watch Bitcoin this Sunday to get a signal for what we might be seeing on Monday. For Bitcoin to be on track to extend its bullish move that it's been on for a little bit, it needs to get back above 17,320 to confirm that it will continue higher. Right now, that's resistance. If we got that move, we could see a surge to as high as 18,000. Now, I'm in an ETH trade right now. My take profit is 1,400. And Dogecoin has been moving between 8 cents and 11 cents. Right now, it's a buy at 0.75 to 0.85. And in my opinion, you could take profits at 0.10. That's it for those who want to swing trade it. In conclusion, the markets may not have peaked, but the smart money is obviously secretly selling. So we need to stay on our toes. We need to get ready for the sell-off that absolutely is coming. Do not believe in that fake Santa Claus rally that a lot of people are trying to hype up. They're literally selling into this so-called Santa Claus rally. I'm personally looking to see a shift around December 13th or the 14th as the potential catalyst date for the market to really begin to sell off. And that's where we're going to get the CPI report as well as the Fed's next response. Now let's do this trade journey together. If you got something out of this video, then show some love by hitting that like. Go ahead and check and make sure you're subscribed and hit the bell to stay connected. Peace and blessings, my friends. Take care.